well, let's take a 20,000-foot view of this situation. We have Zongyuan Liu, Council on Foreign Relations Fellow for International Political Economy. And of course, we have the author of The Sovereign Funds, How the Communist Party of China Finances Its Global Ambitions. Also joining us is Dane Chamorro, Control Risks Partner and Head of Global Risk Analysis and Business Intelligence Practice. Zoe, I want to first start with you in terms of what you saw as the real tipping point here that led to this dialing back of zero COVID.
Yeah, thank you very much, Rachelle, for this great question. I would say there are a couple of factors at play on the COVID and the supply chain shock perspective. To begin with, the protest and COVID-related things, exactly as you just pointed out, the fire in Urumqi, the capital of Xinjiang, really sparked the protest. But it really reflected a deeper frustration and the emotional level of social anxiety, and in particular, Chinese people's uncertainty and to a large extent of the loss of confidence in the economic future. And for example, we've already seen discussions about the possibility of civil servants, even civil service people getting a potential pay cut. So from that perspective, as you were earlier talking about the economic slowdown from 5.5% target and not being able to meet it, but slow down to around 3% or 3.3%. But that number is actually being painfully felt at the individual level.
Dane, when you think about the protests and how they played out, we have seen them quiet down since the government signaled that they are going to back off the zero COVID policy. I wonder if you think there is a risk on the government side in responding to that. They haven't necessarily said, yes, we hear you, we're going to change it because of you, but it did have an effect. And the zero COVID policy in many ways has been really the key to Xi Jinping, the communist government, being able to have such a tight grip over the last 3 years.
Well, I think China was going to exit this policy at some point. The question was when and how. And the Chinese model for pretty much all things is a very measured approach. So I don't think anybody should take away from this that it's going to be an overnight black and white difference between what came, a few weeks ago versus what will come now. It will be a measured, stepped approach across the country. And of course, again, China is a huge country, so you have huge disparities between different parts of China. And what you'll see is them, taking a couple of steps forward if they need to, but perhaps taking a step back. But fundamentally, I think what you're going to see is that by the second half of next year, after the Lunar New Year, which comes in January, and after the National People's Congress meets that happens every year in March, April, the Lianghui, as they call it in Chinese, you're going to see the economy come roaring back because there's a huge amount of pent-up demand, just as we saw in other parts of the world as those economies opened up after certain types of restrictions. Demand came roaring back. And the trick will be, for businesses particularly, can you keep up with the demand? We saw that outside of China as different economies opened up. But as you alluded to, the Chinese economy is so huge, this demand will come back, and the capacity, the trick will really be maintaining capacity domestically to service that demand that comes roaring back in the second half of next year.
And so a lot of people wondering, is there a way to quantify just how much economic damage has been done by zero COVID? And as we said, this is a slow unfolding. And you're saying even with COVID being a priority, there are 4 other Ds that are tied to the Chinese economy that are also on the table. You have demand, debt decoupling, and demography as well.
Yeah, thank you very much, Rachelle, for mentioning, referencing an article that I wrote last month. Absolutely, a lot, exactly as Dan pointed out, as China slowly reopens, we'll probably see a temporary or short-term rebound, just exactly as what happened here in the United States or elsewhere in the world. However, it does not necessarily solve the long-term structural problems. And on top of that, if we just think about the cost of zero COVID or the the unmaterialized GDP cost, right? So if we do a quick, back of the envelope calculation, the Chinese economy is somewhere between $17.7 trillion. And if we say like 2.2 cost, because the economic target was 5.5%, and now let's say optimistically it's 3%. So we are talking about somewhere between 2% or 2.2% loss in GDP, and that is somewhere between $380 billion. So that's not a insignificant amount of money. And on top of that, we're also talking about a lot of major global companies thinking about pulling out of China, or even have accelerated their pulling out of China. So from the long-term perspective, both international factors and domestic factors probably is going to make the Chinese economy in the long run not necessarily going to materialize the so-called 8% growth potential as some Chinese economists might have optimistically estimated.